So we always like, as I said earlier in the show, to track the jobs market and jobs data. We're going to get jobs data out of the US June 2nd, this upcoming Friday. Jobs data in Canada will come out on June the 9th, the following Friday. And we have some really good charts here to show jobs data or job creation in Canada. You can clearly see here how it has fared, been slightly rising the last few months. And these are in thousands. So you can look back in January, 150,000 jobs created. An unbelievable number, a number that we totally weren't expecting, and then dropped down to 22,035 and now 41 in the month of April. And we will get May, as I said, June the 9th. In the US, we're seeing a jobs data coming out this Friday. We have the chart on jobs in the US, and you'll clearly see that jobs have actually been coming down the last few months. Again, January numbers were great, but they've been gradually coming down. And a number, it looks like in January, well in excess of 400,000. And now we're down to about 236,000. So we like to track the jobs market data because that's what the central banks track. As I said earlier in the show, if we start to see a weakness in jobs, we start to see less jobs available, less job openings, JOLTS. That's the number we get out of the US quite often, which tracks job openings. We have less jobs available and job openings. That will mean less movement. People won't be able to change jobs for higher pay. Now, I know if you're thinking, well, that's a good thing for all of us, and it is. But from the central bank standpoint, unfortunately, that can cause inflation to stay or remain stubbornly high. So we always want to track the jobs market. We want to make sure or see how the jobs market is faring. Ideally, for the Fed and Bank of Canada, they would like to see a higher unemployment rate. I know myself and many of you watching would not like to see that, but I know the central banks would, because in their minds, that would help slow down the economy, slow the demand down for products and services, which causes inflation. And so that would hopefully allow them to pause or stop raising interest rates at this point in time, if they could see a slowdown in demand, and obviously stemming from a slowdown in job creation. So let's look at what happens this Friday with jobs data out of the US. It definitely will set the tone for the markets, both in the US and in Canada.